Our first guest this morning says U.S. stocks will return over 8% this year. The S&P 500 will almost double by 2020. It's a pretty bullish outlook for the decade ahead. Bob Dahl joins us now. He's Vice Chairman and Chief Equity Strategist at BlackRock. Bob, I'd say yesterday more people were in your camp, in the wake of July that saw the best monthly gain in quite a while. August began with a boom, but today a little bit more apprehension out there.
Yeah, there's no question the economic reports, some of the earnings report, as you just cited, a little sloppy today, and so we're taking back some of the good stuff we got yesterday. But August to date, we're doing okay, I guess is another way to look at
it. fair perspective. But do you think that this can extend through the summer? In other words, does back to school really become the game changer on the economic front and on the consumer indicator front?
Well, look, I think till we get out of this trading range, which we've been stuck in for some time, we've got to get past the word double dip in our vocabulary. So many are talking about it, and I think that jobs will provide the key, and my guess is we will have some job growth, not enough to substantially bring the unemployment rate down, but enough that we're going to get some more income, and that will help folks realize we're growing slowly, not double dipping.
Some job growth may be enough for the economists, may not be enough for the consumers out there, though. What could put, sort of the fly in the ointment to your bullish outlook for the decade ahead, for the year ahead?
Well, we don't have a bullish outlook for the decade. We're looking for stocks to return only 8%. That's way below their long-term rate of return. We think growth will be slower this decade than it has been for the average over the last, let's say, 100 years or since the S&P 500 was started a bunch of decades ago. We think there'll be growth, call it 4 to 6% earnings growth in the U.S., 6 to 8 from the non-U.S. portion of the S&P 500, a couple of points for dividends, and that gets us to an 8 number, which is certainly a lot better than the last few years, but nowhere near the long-term returns.
A fair point. Perhaps I should have said you're more bullish on the U.S. than many out there as compared to the rest of the world. You say U.S. equity returns are going to outpace developed nations, but you're still looking for the growth to come from those emerging markets.
Yes, we think the emerging markets will outperform the developed ones, but within the developed markets, we think the U.S. stands as good a chance as any to win the race, that is the U.S. versus Europe versus Japan.
And you think China's going to overtake the U.S. by 2025? You're not worried about overheating there, derailing that?
Well, there's no question China has been worried about overheating, has been tightening policy. We think they will be successful and China will continue to grow. No, maybe it's not 12% real a year, but how 7 or 8? That sounds pretty good to me.